What's up everybody? Welcome to the Stocks channel. My name is Corey and today we see a massive sell-off across the board in the stock market as we prepare for big tech earnings. Are we going to break down and enter a prolonged bear market from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 2.9% and we have another massive sell-off and we're getting way too oversold yet again. This is the third day in a row with the price action way below this lower Bollinger Band. Even though these Bollinger Bands are expanding, this is an extremely oversold condition. And we did come down to the very strong support level at 416, which is going to be a stop loss rate if we do start breaking below this level. Remember I said this before that the market loves to cause a lot of pain and it likes to hurt the most amount of people. And there is going to be a lot of people in long positions that are setting their stop losses below these lows at 416 and 411. So there is going to be the possibility that we do take out those stop losses, liquidate all of those people out of their positions, and then see a massive bounce in the market. So while there's no guarantee we have to break below this support, if there is enough buying pressure at that support level and we are getting a little too oversold, we will see people starting to cover their short positions and long entries starting to come in at that support. So don't just think we have to break down through that support level. But if we do start seeing price action slicing through that support, I would expect to see a very quick sell-off as those people are forced liquidated out of their long positions, hit a critical support level right around 411 and possibly even as low as about 408, and then see a massive bounce all the way back up to resistance. And the most likely area of resistance is going to be right around SPY 428 to 433. And then if we're going into the bear market, I would expect to see expedited selling from resistance as we get rejected, come back down, take out the lows and continue to flush to the downside and more than likely fill the gap at SPY 400. So as you can tell from what I drew, I do expect to see a massive bounce after we see that forced liquidation. And then I do expect us to continue into that prolonged bear market where we could see SPY go down to about 400 or down into the 390s or 380s. Now, just because I think that's what's going to happen doesn't mean anything because the market doesn't care what I think. So there is still going to be the risk that we just flush down and continue lower and go straight down to SPY 400 without looking back. I just think it's highly unlikely because the market loves to cause a lot of pain. And what's more painful than getting forced liquidated out of your long position just to watch the market run away without you? Now, obviously, there's still going to be a bullish scenario, and in the bullish scenario, we'll come up here, break out, make that level as a support, get a confirmation of the retest, and then continue to break out from there. So in the bullish scenario, we need to see SPY breaking back out above our resistance trend line and starting to turn some of this upward resistance into confirmed support, bounce and take out the highs, and then we could see a confirmed bull trend. But from here, all of the momentum is to the bear market scenario, so there's no reason to be getting bullish until we get confirmation of a bullish breakout and a successful retest. Now, as you can tell, we are at very good risk-reward ratios off of these strong support levels, so even in a bear market, you can still take long trades. Don't make the mistake of thinking you can only do short trades. Even if we're in a bear market, you can still take long trades. Just make sure you're taking your profits at resistance and you're only buying at very strong support levels and setting your risk accordingly. Whether you're buying at support and selling at resistance or shorting at resistance and covering at support, either way, you need a solid trading plan and you need to execute it accordingly. So from here, we are very close to having the full bear trend because that 20 simple moving average is getting very close to crossing below the 50 EMA. So any rejection of a lower high at resistance is going to likely send us into that bear market as we develop the bear trend and continue to see a lot of selling pressure and a lot of bears shorting at resistance. Remember that markets don't have to be rational, so even if earnings are going well, it doesn't mean the market has to break out of this downtrend. It's a trend until it's not, and it's a downtrend until we get the bullish breakout. So respect all of these critical resistance levels to the upside, with the strongest resistance being around 428 to 433, and that very, very strong resistance zone will be 438 to 444. Now that means if we start breaking out of strong resistance zones that we're getting more bullish, but that's a long ways away and we'll cross that bridge when we see the price action. So right now we need to treat every bounce to the upside with skepticism as we are more than likely going into a prolonged weak period in the market that could take us through the rest of the big tech earnings and likely through FOMC next week. So look for that very critical breakdown below 416 and 411 as the very strong support that needs to hold up for any hopes of a bullish bounce. On the NASDAQ 100 triple Qs, we were down 3.77% today, and we did break down and form a new low. The previous low was down here right around 317.45, and we did have a low today right around 316.86. So we did break down and close below that low. Now, just like I said on SPY, we are more than likely going to see a forced liquidation event below these lows. So it is possible we see a quick trip down to the low 300s or somewhere around that gap close at 315 and possibly even somewhere in between right around 309 to 308. And then we could see that very strong bounce all the way back up to test resistance, and the most likely resistance is at 334. We have resistance above 334 at 341 and 347, and we'll be looking a lot more bullish if we can start closing above 347, with the bullish breakout being all the way above here at 357 to 360, which will be the gap close. So there's a lot of upside before we see any bullish breakouts. So just like on SPY, you need to respect the fact that there's a lot of bearish momentum. And as you can tell in the triple Qs, we already do have the bear trend. As I always say, the trend is your friend, which means if you're trading in the direction of the trend, you are more than likely going to be profitable if you are trading with the trend. So that means you need to start considering short trading at resistance. So the levels to look at short trades will be right around 334 and 341 at this level. Now keep in mind that doesn't mean you only want to short, because as you get down near strong support, you want to consider long trades or at least covering your short positions, because we're more than likely going to see bounces at support. So anywhere between 303 all the way up to about 318 will be a support zone, which means if you're trying to catch a bottom, you're looking for a bounce somewhere from this level, confirmation of a reversal, and the next time we break above 318, we will more than likely come up here to test resistance in the 330s. So follow the price action and respect the fact that there's a bear trend, so you shouldn't be getting bullish until we see some sort of confirmation of a bullish breakout in the price action. On the Dow Jones, we were down 2.38% today, and the Dow Jones is also very close to having the bear trend. And as you can tell, we are very close to hitting the double top price target down here at 326, because we did break and close below another critical support level at 333. So just like the other indices, there is likely more downside in the short term before we see that strong bounce. And on the Dow Jones, we need to break back above 333 to test resistance at 340. And we need to break above 340 and the 50 EMA at 345. And then we could likely close that gap at 347. Above 347, we'll have the bullish breakout, with bullish breakouts above 347, 350, and 353. But you really shouldn't be expecting that to happen, so wait for bullish confirmation to get bullish. With the bearish momentum and likely going to develop the bear trend, you're looking for opportunities to short at these strong resistance levels around 340 to 345 and 347. Now keep in mind the double top price target is no guarantee, as there are no guarantees in the stock market, so don't just assume we have to go down to 326, even though that is the valid price target as long as we have the bearish momentum and the bear trend. As you can tell, the Dow Jones is also getting oversold way below the lower Bollinger Band, so don't rule out the possibility we get a very strong bounce from here, somewhere to form a lower high before we see any more downside. On the Russell 2000 small caps, we were down 3.15% today, and we did get confirmation of the bearish breakdown with the close below 191. And we also did take out the previous lows right around 187.9, closing at 187.7. So from here, it looks very likely that we're getting the full-blown bear market continuation in the small caps. So we will have the possibility to bounce from here as we liquidate shorts with support right around 183. But we are more than likely looking for a rejection around resistance at 191 all the way up to about 195 to 199. And then a continuation of the bear trend to go down towards that price target at 170. We have the bearish price action breakdown and we have the bear trend. So you're looking for a lower high to short into as we continue lower, or waiting for the bullish breakout above 203 or 208. On the ARKK ETF, we were down 6.75% today, and ARKK continues into the bear market as it breaks down through the low at 52 and comes down very close to testing support at 50. Remember, below 50, we're looking for a full-blown bear market continuation all the way down to the price target at $40. And we could get a strong bounce off of $50 and come all the way back up to about 61 with resistance on the way there right around 59. If we do get the breakout above 61 to 62, you're looking for the gap close at 66, and you are not getting bullish on this ETF until it starts closing above 71. So if you are playing long trades in the ARK ETF, you are going against a very strong downtrend, so I don't suggest doing that. You're better off trying to short at resistance and going with the direction of the strong bear trend. On the VIX, we were up 24% today as we see the VIX continuing to spike out and close above 30. So this is all you need to see in a volatile market to let you know that a bear market could be right around the corner. We're down near very strong critical support levels, so it is possible we do see a bounce in the short term. But as long as the VIX is trading above 24 and developing a bull trend, you do want to be cautious of the bear market scenario. We can get more bullish if we see the VIX crushing below 24, with the full-blown bull trend likely coming the next time the VIX crushes below 20. That's a long ways away, so right now things are looking a lot more bearish, so continue to respect the bear trends in the indices as the VIX is elevated above 30. On Bitcoin, you can see that we're continuing to break down as we lose that support level at 39,000, and Bitcoin is currently trading just above support at 38,000, and we have that strong support at 37,000. If we break below 37,000, you're looking for a retest of support at 30,000. And if we get the bullish breakout, we should see price action breaking above 42,000 and then closing above 45,000. We have the bear trend and we did break down through support at 39,000, so there's no reason to be bullish until we get a bullish breakout. Continue to respect the downtrend and look for the next possible bounce off support at 37,000. And even if we do bounce off of that support level, you're looking for a lower high, so a rejection somewhere around 39,000 as we continue lower. On NVDA stock, we were down 5.6% today as we see NVIDIA is in the confirmed bear trend and we did lose that support level at 190, so NVIDIA is without a doubt in a bear market. That doesn't mean it can't bounce and it can't go higher from here, so there's still the possibility we bounce off of this level or go down to the next support level around 179 and then start bouncing up to test resistance. Remember, we broke down through a very critical support level right around 210 and we have not yet tested that level as resistance. So I do expect to see a bounce in the short term on NVIDIA to at least go back up to 210. Above 210, you're looking for a retest of 223, and above 223, you're looking for the gap close at 230. We have the bear trend, so don't try to swing long trades for too long because we could still go much lower, and you're looking for the next downside price target at 179 once we get rejected from a lower high at resistance. On Tesla stock, we were down over 12% today as Tesla has very high volume selling and slices down through 3 critical support levels in just one swift motion. We lost support at 975 and I told you it'd be a quick trip to the next support at 937, and then we lost that level intraday and it was a quick trip down to 900, and then we lost the support level at 900, closing way below the lower Bollinger Band. There is no way you can look at this candle and be bullish, so you need to be extremely cautious when you see candles like this because this is bear market behavior. One day selling going through 3 strong support levels on a big market moving stock like Tesla is extremely bearish and something you need to take with severe caution. At this point, we're risk off on Tesla below 900, but I do think in the short term this is way too oversold and will likely backtest resistance, which is the breakdown below 937. And if we break back above that, you're looking for a back test of resistance at 975. With all of this bearish momentum, I would expect to see a lower high forming as we continue lower, and the next logical level of support will be down here right around 828. On Apple stock, we were down 3.73% today, and we're very close to hitting that price target at 156.5 from our confirmed double top because we did break below the neckline. We knew it was likely we were heading lower to 156.5. If we lose that level of support, which is our downside price target, we are more than likely coming back down the retest of the lows at 150. From here, we will likely see a bounce to retest resistance, which is right around 163 to 164. And if we could break above that, you're looking for a retest of strong resistance at 168. Above 168, we're looking a lot more bullish, and the next time we break above 171, you're looking for a quick trip to fill the gap at 174. And remember, Apple stock does have earnings after the bell on Thursday, so that is going to be a major catalyst. On the financial sector, we were down 2.5% today as the financial sector continues into the bear trend, so there's no reason to be getting bullish on the financials until we can get back over the 50 EMA. On the industrials, we were down 2.18% today, confirming the bear trend today with bearish price action, so don't get bullish on the industrials until we get back over the 50 EMA. On the healthcare sector, we were down 1.76% today as we closed below all the moving averages for the 3rd day in a row, and we are severely losing the bull trend, which means we could be going much lower. On the energy sector, we were up 0.14% today, trying to close the gap above at 76, but still getting rejected and closing below the 50 EMA for the 2nd day in a row as we lose the bull trend, and it looks like we're rolling over and going through that deeper correction in the energy stock. So jumping back over to the S&P 500, this is definitely bear market behavior with the price action, and you can very clearly see the bear trends developing and the bearish price action across the stock market in all of our market moving stocks in the sectors as well as the indices. So while there is likely going to be a bounce in the short term, it is more than likely going to lead to a lower high as we get rejected from resistance and resume into the bear market, or we will see a decisive bullish breakout, which is going to take a lot of work for the bulls, and we will very clearly see it developing because you don't go straight from a strong bear trend straight into a strong bull trend. So try not to get FOMO when you start to see green in the market. It is completely normal to see counter trend rallies and very impulsive bounces in all bear markets. And right now you need to start treating the market as a bear market across the board, because I went over this on the weekend when we started seeing bearish price action slicing through critical support. This is a market with motivated sellers and no buyers, and there's no telling how low you can go in a bear market. So take the price action and the trend seriously. And as a long-term investor, just make sure you know where you're accumulating for your long positions. And as a trader, you need to be on top of your game with your risk management, and you need to have a very solid trading plan. Don't forget, I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even in 2008, when the market was going into a bear market, Bank Trade Alerts still beat the market that year and still had a positive return. If you're looking for more information about Bank Trade Alerts or want to subscribe, you can find out all of the information in the description below. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.